Hey, this is Nick from Income Digs. Welcome to this video tutorial. We're going to talk QuickBooks Online today, specifically for rental property and for flip investments. We're going to talk about the difference between capital improvements and cost of goods sold. All right, so when we spend money to renovate our property, that's what we all do as real estate investors. We have a decision to make, and sometimes there's really clear guidelines that the IRS wants us to follow on whether or not we're going to capitalize those improvements and put them on our balance sheet, or deduct them as expenses and cost of goods sold. So I'm going to break that down with you and show you the mechanics of actually getting it onto our reporting accurately. We talk about this and more in our end-to-end course, Real Estate Accounting Bootcamp. I encourage you to check that out. We go through everything that you would ever need to know to track your books within QuickBooks Online in that course. We'd love to see you there. But getting into QuickBooks here, we're going to go to a balance sheet as of 2018 just to get to our really simple example where we have a property on our books. And we have a property that we purchased here. Okay, I did this in previous videos and you can watch those if you'd like, but we're going to carry on with this example. We bought this building, bought this property for $250,000. Okay, so we split it between land and building. Okay, we had some closing costs and we put this property onto our balance sheet. So what I'd like to do first is think about this as a rental property, okay? So if this is a rental property, and when it comes time to do renovations, okay, generally speaking, big renovation projects to your rental property should be what's called capitalized, okay? And that means when you incur expenses that account for a renovation to this property, instead of putting them on your profit and loss as like rehab costs, we're going to want to put them in our balance sheet somewhere here to adjust our basis. Okay, that's generally speaking. Now, there are some rules as far as what types of expenses should be capitalized versus expended. Okay, and that's a common question that comes up. It's not cut and dry. It's not black and white. For example, if you are flipping over a rental property from one tenant to the next, doing a turnover, right, and you have to paint the walls, that is something that, I'm painting, but it's really considered more repairs and maintenance. Okay, so for guidance on this, you're going to need to talk to your tax professional for sure. Okay, but what I'm going to teach you how to do today is to put it in one category or the other and potentially switch if you need to. That's okay. What I want you to do is throughout the year, put it in one place, have a reason for that, and then be able to drill down into that to show your accountant, here's what I did, here's the expenses I incurred, should these all be capitalized or not? Now, for reference, you can check out this IRS publication 527, okay? So additions or improvements to property. So this is where the IRS is telling us that when you improve property, it's going to increase your basis. It's going to go to your balance sheet, and then you're going to depreciate that over time, okay? And there's certain depreciation schedules. Again, I don't want you to have to come up with those depreciation schedules. Your tax professional will do that, but just getting it to the right place in your reports, in this case on the balance sheet, is the important part we need to flush out. Okay, so right now, this basis is really the land, the building, and the closing costs. I have a basis of $256,000, okay? So we need within our chart of accounts, first and foremost, we need another category for those capital improvements. Now, I have already got that right here. I got it CapEx. So I use the term CapEx. You're going to hear that a lot in the industry. You could just call it capital improvements. You could call it improvements. You could call it renovations, whatever makes sense to you. I've got it right here. Now, notice what I'm doing, and this is the case for all the videos that I show. I'm using a generic chart of accounts, okay, and I'm using class to differentiate my property. Notice I don't have 123 Main Street land, 123 Main Street building. That is not scalable for the number of properties we're probably going to have on our books, okay? So instead of doing that in my balance sheet, because I've tracked everything to the class, I can display columns by classes, and I'm able to see for a specific property, what my values are. Okay, Swan being this example here. Okay, so as I spend money on capital improvements, I'm just going to use that category. It's really simple. Okay, I'm going to turn off classes for a second. Okay, so nice and simple. I'm going to create an expense. This is going to be for capital improvements. So let's say that we're going to Lowe's and we're buying flooring or something like that, okay? So from which account did it come? Your bank account or your checking account or your credit card, whatever, okay? Now I'm going to make this transaction as of 2018. Again, just to follow the example, I'm recording this in 2023, but okay? And right here, category, okay? This is where we're going to indicate CapEx, okay? CapEx, nice and easy, and we're going to say flooring. How much did it cost? $5,000. customer or project. I'm going to talk about that in a second, but for now, I'm just going to put class as Swan. Okay. Now, I'm logging it as a category here. I will talk about items in a second, but for now, I just want to log it as a category so we understand where it goes. I'm going to click Save and Close, and what I'll expect to see is my CapEx now starts to populate. So it goes here on my balance sheet. It does not go, if I drill down into my net income, it does not go here. Now it could, and let me just show you what that looks like. I'm just going to go into this transaction and adjust it from CapEx to say something like rehab costs, okay? Now there is a place for, this is a cost of goods sold, for rehab costs on your P&L, especially if you're flipping houses. Okay. Now I have some deep dives into flipping. We'll talk about it a little bit here, but notice that I got this to rehab costs. That's cost of goods sold. If I save and close this and then go back to my balance sheet, notice that it has gone from my balance sheet, and where did it end up instead? It's on my P&L. Drill down into that, and there it is on my P&L, that 5,000. Okay. So there is a place for this. However, if you're doing a rental property, and you're doing a big renovation, okay, not turning over the apartment, but we're maybe putting on a new roof. Maybe we are doing a BRRRR investment, and we're doing that renovation to maybe make it from a 2-bedroom to a 3-bedroom, or we're renovating the bathroom, renovating the kitchen, doing any kind of major project like that. Especially on a rental property, we're always going to put this toward our CapEx. Now, we are going to be using products and services. I'm going to tell you why we're going to do that in a second. But for now, I'm going to move this back to CapEx. Okay. Move that back to CapEx, save and close. Okay. And now it's back on my balance sheet. Okay. So that's one transaction. Let's just make another one. Notice it's gone from my profit and loss. Here it shows up on my balance sheet right there. Okay. Let's create another expense. Let's say that we're doing the roof. Same kind of situation. I don't have any. We'll just leave payee blank for now. Payment date. Again, category CapEx, roof. 15,000. Class Swan. Okay, so now my CapEx should be at 20,000, and that's going to continue to go up with this project and other projects in the future. Okay. Now, if you wanted to be able to separate out, all right, I'm renovating maybe this unit versus that unit, or this is my renovation that when I purchased, I did this renovation, and then maybe I have another renovation 10 years later. That's when you can maybe make use of the project. Okay. Now, for rental properties, the project isn't as good because rental property is lasting more than a year, right? There's no start and finish, but you could use project for a rental. And actually, I'm going to do this here. First, I got to create the customer. The reason you would do that would be to differentiate the 5,000 from the 15,000. So let me do that real quick. Let's go into my customers. Okay, so if we're using projects, which if you're flipping, you're probably going to be using projects. I'm going to create a new customer, and I'm just going to call it Swan because that's the name of the property. That's my customer. Okay, and now within Swan, I am going to create a project. And I can create more than one. Let's create project 1 is going to be initial renovation. Okay. And then maybe I'm going to create another one. Okay. So here I'm back at Swan. I'm going to create another project, add project. This will be the unit B renovation, whatever. Okay. This would allow me to keep one class, but multiple projects. And now let's go back into my balance sheet here. I can take this spending, this 5,000, okay, and I can put it toward my Swan project. There's my initial renovation, and then go into the 15,000, and this is the unit B renovation, okay? So where am I going to see that differentiated? I can take my CapEx, and instead of grouping by other, I can group by customer. And there I see the initial renovation, 5,000, and there's my unit B renovation, 15,000, okay? So we do have that value. Now, again, if we're flipping, we're going to be putting this to cost of goods sold. We might want to be switching these back and forth. For example, what if we come to the end of our tax year and we give our accountant, here's how much I spent, Here are the categories I spent in. And they might tell you, hey, you know what? That painting that you did on that one unit, that's probably a cost of goods sold. You should probably expense that $4,500, okay? And if that's the case, all we have to do at the end of the year is we make this nice simple journal entry. End of the year, 12/31/2018 in this case. And all I'm going to do is I'm going to say CapEx, okay? Here's my CapEx. Here's my rehab. And I'm just going to say that, you know what? My accountant said put $4,500 in my P&L and take it out of my basis. So this is going to be adjustment based on convo with accountant, okay? You're not going to do this stuff yourself. I want you to put everything pretty much in one category and then have that discussion with your accountant to decide where it should go, okay? I'm going to put that here. I am using business as well. I'm not going to talk about that during this lesson, but I just want to do that. Okay, so then what happens there is that $4,500 will drop off of my basis and it goes to my net income. So we can move these things back and forth. Now that's a really good idea for a couple reasons. One is when we're flipping, we're typically going to be putting everything toward the P&L, and that's probably where it should stay unless we have a flip that goes over a tax year. Okay, maybe I bought the property in October, but I don't sell it until the next year in March, right? At that tax year end, I don't want to take that huge deduction. So in that case, we're doing the opposite. We're going to take it from the P&L and move it back over to the balance sheet with the journal entry, okay? Now let's talk about products and services. So far, I'm just using the category, which is fine. Okay, actually that's the bad example for that. Let me look here. Let's go back to our balance sheet. So there's that 15.5. Let's drill down into this. Okay, so I picked up on category, right? Now we can and we should think about using our items table. So what our items table does, and we have many videos on the value of this, so there's plenty more to cover here, is instead of doing, okay, CapEx, instead of that, we can actually pick on a really specific category. For example, roofing, okay, roof costs $15,000. Oops. And I'm going to use the items table instead of the category here. Okay. So this will give me a little bit more detail on what my capital improvements were. And that's essential when we go to our accountant and say, here's how much we spent. We're able to separate things out by these categories. Now, here's what's interesting about this. If you flip and you have rental properties, you have to be really careful about the mapping here. When I say the mapping, I mean that this product and service, this roof right here, I have already mapped this in my setup to go to rehab costs, which is on the cost of goods sold. So what this is going to do is it's going to put it onto the P&L. Okay, so, and I just told you we don't want to do that, right? But let me do that and show you why it might be an okay idea for you to put things on the P&L initially and make use of this really cool products and services thing, especially if you flip as well. And then easily, you could do a journal entry to move it over. I'll show you exactly how to do that. So this 5,000, I'm going to do the exact same thing with this. I'm going to say, instead of it being category here, this is flooring. So I'm just going to see if I got an account there for flooring. Perfect, 5,000. The project is the initial renovation. Class is Swan. I'm going to X this one out, save and close. Okay, and so now my P&L, I'm going to get rid of this journal entry too. So that $20,000, because my products and services are mapped to my P&L, not my balance sheet, they show up here, okay? So what do I do about that $20,000 that shows up here? Well, let that all happen, and then at the end of the year, have that discussion with your CPA, drill down into this, and group by product or service, and then you can talk to your CPA and say, you know what, I spent 20 grand, 15,000 on the roof, 5,000 on flooring, and they might say to you, you know what, that's all CapEx. Okay, that's all CapEx, great. Tax time, let's do it. Journal entry, 12/31/2018, end of the year. Okay, we're gonna take that rehab costs, we're gonna credit it $20,000 because my CPA just told me all of that should be capitalized. Okay, so I'm going to move it over. And notice one thing that's kind of neat about this. I'm leaving name blank, meaning I'm leaving the project blank. I'll show you why that's helpful. I'm going to click Save and Close here. So what this will do is it'll zero out my P&L. So I go back to my P&L. I don't have any rehab costs on there anymore. It's zero, right? It's all gone to my balance sheet because my CPA told me to do so. All of this should be discussed with your CPA. I'm going to show you, and I have showed you where to put it and how to move it, okay? But it's up to you and your CPA to decide how that should go. And so I mentioned that I left the name blank on the project. And the reason that is really valuable is if I drill down into my projects over here and I look at my initial renovation versus the Unit B renovation, actually, it looks like I need to make a quick update here. Let me grab these again. We go into the P&L. It looks like I didn't mark the one project. So I just want to make sure we capture that. Unit B renovation should be there. Yep. Interesting. So for some reason, it's not showing up there. But let's just look at the one that it is showing up for. So there's my initial renovation right here. I see that the 5,000 shows up. And the fact that I moved it to my balance sheet doesn't impact this at all. So I'm able to look at this project collectively and find out how much I spent on that renovation, which is really helpful. You know, I can drill down into this and look at it by product and service. Now, of course, right now it's just the one, so it's not really that useful to me. All right, a couple things. Let me show you that product and services setup. Okay, again, we have a specific video on how to set these up, and we have some imports that you can use. But just so we're on the same page, I've established this list of products and services. And when I talk about mapping, roof being one of them here, when I talk about mapping, notice that I say that I purchased this and I indicate the expense account. It goes to rehab costs. Now, if rehab costs is cost of goods sold, if you're not flipping ever, then it probably makes sense for you to set this up and map it to your CapEx. That way you don't have to do that transfer. But that means it won't populate in the project. Remember that a project is only going to pick up cost of goods sold. It won't pick up the balance sheet. So, you know, depending on your setup, if you flip, you're definitely going to go to cost of goods sold. Even if you don't flip, you might want to go to cost of goods sold just so you can get it in the project and then move it over after. And let me show you how valuable this is with a different example. I'm just going to another company here. And we go to a project with a little bit more sample data. Let's go to projects. This one right here, maybe. So here I got 90,000 in rehab costs. Now this is an actual flip, but let me show you products and services in action. So here's all my rehab costs, like 90,000. If I'm using product and service, I can group by product and service and get extremely detailed reporting to indicate, you know, here's how much I spent on permits, on demo, on plumbing, all that stuff, right? Super helpful to see. Okay, and of course, then we can track that against budgets as well. Okay, not necessarily in QuickBooks Online Plus, but in QuickBooks Online Advanced, they do have a budgeting feature that includes being able to separate out by project. Okay, but this is still really valuable. Even if we're using something external to QuickBooks Online, we're able to track our actuals versus our budgets. Okay. So what is crucial and what we're really trying to drive home with this video is to understand that you're either going to be tagging these expenses to CapEx or to cost of goods sold. And what you need to understand is how to put them in a place that you can then reference them and have a discussion with your CPA to decide, did I put them in the right place? Do I need to move things around a little bit? If you're doing a lot of projects, it makes sense to kind of have everything go to the right place initially. There's less movement at the end. But remember that year-end journal entries are completely normal, completely natural. So if you're not getting it 100% right during the year, as long as you're okay with how it is going and you can reference all of that when it comes time to talk to your tax professional, you'll be in great shape. Okay, so let me know if you have questions on this. We'll continue on with this example. We'll actually talk about depreciation in a future video. Okay, I want to know your questions, your comments, anything that's come up. If you have examples of expenses where you're not really sure, I can give you my opinion. Again, I'm not the CPA, but I can give you my opinion on what I've done with those types of transactions in the past. I also want you to check out our end-to-end accounting course, Real Estate Accounting Bootcamp. It's amazing. We have a ton of content in there. It's really teaching you everything that I do within my own real estate investing business in the entire process, how to get a VA involved, how to report to your CPA. All that is jam-packed into that end-to-end course. And we have tons of free material online at incomedigs.com. We'll continue publishing videos on YouTube as well. So let me know what you want to see, and I will be sure to put them in the queue. I look forward to seeing you on the next video.